Okay, so today we're looking at the S&P. I rarely cover this market only because, it's quite valuable. Everyone's interested. And so I want to do this with the idea that I'm showing you something that is valuable. Clients see it and, they take advantage of it. At this point, I think it's important to let people know that our suspicion, of course, we could always be wrong, is that we're starting a major correction. Now, how will we know that we're starting a major correction? Well, with GAN, it's always about time and price. You can't trade just off the cycles. So the fact is, you got a 20-week cycle. Every 20 weeks, you get a turn. You can see pretty clearly it doesn't always work, but it works most of the time. And sure enough, what I said to clients before, long before Labor Day, I told them, look, there's a good chance that you're going to form a high end of August, turn down that week in sync with the Labor Day holiday. So that's what happened. Now you got to rally back, and the buy the dippers are telling you, hey, it's a buying opportunity. Get out there and buy. That's not what GAN would say, but that's what a lot of people in the media tell you. Nobody ever wants to give up on the stock market until they get hit over the head with a 2x4. If my suspicion is correct, you're going to get hit over the head with a 2x4. Could I be wrong? Yeah, the market can do whatever it wants, and the market is never wrong. But if you close below certain key levels, I will be convinced that this 20-week cycle is giving us a major correction. Now, have we done that yet? No, but I think we're getting closer, and I'm not going to give you those levels here. I want you to subscribe to the service, but now is a good time for you to know. Here's a little free tip that, hey, this is looking pretty ugly. You can see how big that bar was. You can see, over here it reversed itself. Maybe it's going to go back up. You could make the argument that, hey, this is a low, not, just like it was back here, and you just go right back up. But if you close below certain key levels on the GAN charts, GAN support, square of 9 or retracements, etc., then we're going to have validation that the 20-week cycle is giving us a very important top. So remember, GAN is not like traditional technical analysis. Most technical analysis, you only look at price, you disregard time. The reason we look at time is because the 20-week cycle gave us a heads up that there was a good chance of a correction as we late August high, and then you start into September, boom, you start moving down. And if we take out certain key levels, then you've got price validating time. Price is telling you that, hey, this is a big correction. So that's what we're trying to get across here with GAN, is that you look at both together, time and price. You look at the GAN cycles, like the 20-week cycle, to tell you when it's likely to top, and then you look for a close below key support levels to tell you, hey, the price is confirming that this thing is really going down. So that's how it works. It's a very simple idea. People try to make it more complicated than it really is. I'm not here to mystify you with pixie dust and pretend that GAN is something you'll never understand. Quite frankly, I think anyone can understand GAN. It's not that hard. But, you look at it, and the truth is, a lot of people don't want to look at cycles. A lot of chartists, and certainly not fundamentalists, don't ever look at charts. But the reality is, even amongst chartists, very few of them actually look at cycles. And I think the point there is that, hey, if you only look at cycles, you're probably going to get it wrong half the time, because the cycles don't work every time. Sometimes they just flat out don't work. So you need validation. So I'm trying to get across the very important concept here that you need to prove that the cycle is pointing to a big correction, not a small one. So for that, I would like to show you those charts, but I also want your business. So if you're really interested in the S&P and you want to know those levels, think of it this way. If you fall off a cliff and you hit the ledge on the way down, maybe that stops you and then you climb back up. Or maybe you just bounce off that ledge and continue down to the next ledge. That's what I think is going to happen. It's not Wile E. Coyote where you fall off the cliff and you see a puff of smoke at the bottom. It's more like you keep hitting ledges all the way down. I think that's what's going to happen. But let's see. The market is going to be exciting this fall, and I'm hoping that I've piqued your interest enough that, hey, at the very least, give us a thumbs up if you like this, and follow us, hit notify, and maybe even register the website. You get a few free reports. But if you've got a lot of money at stake, it probably would not hurt you to subscribe for 3 months, check us out, and if you don't like it, you don't have to continue, but I think now is a great time to try out the service when all this potential volatility is about to hit us in the head. I'm talking about a 2x4 over the head. Like I say, what I told clients this summer, as a rally into Labor Day sets up a market crash this fall as the 20-week cycle comes due. Death by 1,000 paper cuts? No. Death by an anvil falling on your head. Warren Buffett has $287 billion in cash. Buffett is a market timer. Don't believe his nonsense. Ignore his buy and hold BS statements. Watch what he does, not what he says. He is a wily character. He didn't get to be where he is by being stupid, so I do think what he does is important. If he has $287 billion in cash, which is a sizable amount of his overall portfolio, a lot more than anybody else would do. I mean, if that's what he's doing, why are you still in the stock market? You know, this statement, the Gann stuff is screaming at you. And trust me, this is not the only chart. There's a lot of charts screaming at you to get out of the stock market. And if I'm wrong and it goes to new highs, okay, right, you get back in. But, a little ounce of prevention, take precautions, I think you need to know the potential is there, not just because of the 20-week cycle, but because of the other 40 charts that I show you. Clients get to see 40 charts on the S&P, sometimes more. You get to see all those charts and you get a more holistic view of what's really going on in the stock market. So I hope this has been helpful, and if you like us, give us a thumbs up, and we'll keep doing this for you. Thanks a lot.